Hi there, very good morning. Welcome back to ET. Now you're watching Market Cafe with me, Kanishka Sarkar. Over the next 1 hour, we'll take you through all the global and domestic cues that you must watch out for and also tell you about the stocks that you need to keep on your radar today ahead of start of the trading session on D Street. But let's get started with an eye on the globe first and see how the Wall Street fared overnight, and US markets did finish yesterday on a higher note. It was supported by softer than expected ADP jobs data that actually boosted hopes for a Fed rate cut next week. The Dow jumped over 400 points, that's up nearly 1%, whereas the S&P 500 that also added about 0.3% gains. Nasdaq on the other hand, that closed about 0.2% higher. Now in terms of after hours trading, Salesforce climbed more than 5% on strong revenue outlook, and Five Below that rose nearly 2% after posting earnings that topped expectations. Now let's talk about the jobs report. Now this ADP report showed a surprise drop in private payrolls for November that's pushing the market pricing for a December 10th rate cut to nearly 89%. But despite this optimism, the AI trade that remained shaky. Tech was the weakest S&P 500 sector, with Microsoft, Nvidia and Broadcom, all of them under pressure. Microsoft in fact slipped 2.5%, this after reports about lowered AI software target claims. Now this company later refuted these claims. However, the stock did end about 2.5% lower. In fact, strategists note that the rotation away from big tech and into defensive sectors, that is marking a potential early sign of risk aversion, and also investors are watching developments on the Trump administration's tariff agenda after comments from Treasury Secretary Scott Bessent at the Dealbook Summit. In terms of what to watch out for, of course, there's the next week's Fed meeting. Continued sector rotation signals, tariff policy updates, and whether tech can really regain momentum. So yes, that's about the Wall Street, but let's also tell you what's happening as far as the crude market is concerned. And oil prices did bounce back yesterday, rising more than 1%. That's after Moscow confirmed that peace talks with US officials brought no breakthrough on a potential Ukraine deal that's keeping sanctions on Russian oil firmly in place. And on the back of these developments, Brent crude climbed to above $63 per barrel, whereas the WTI rose past at $59 level. In fact, geopolitical tensions also flared after Ukraine struck oil export sites and sanctioned tankers in the Black Sea. That's adding fresh supply worry. So yes, these gains were capped by a surprise rise in US crude and fuel inventories as well. So yes, that's about the crude move, but let's also put the spotlight on the yellow metal and see how gold did. Well, it held pretty steady, supported by weaker than expected US private payroll data with strengthened expectations of an interest rate cut. Like I mentioned before, spot gold that hovered around that $4,200 an ounce mark, whereas silver that actually hit another record high driven by supply concerns and overall strong demand. So yes, safe haven metal stayed firm as rate cut hopes and geopolitical uncertainty, all of that is keeping investor cautious about the equity markets. So yes, that's about the Wall Street and commodities check, but let's get started and take you through some of the top